Alrighty, good morning everyone. Good morning, Mercury.
Good morning, my man.
Good morning, good morning. So before we get started, let me know if Mercury's audio is okay. We try to turn it up pre-stream.
Testing.
Hopefully you guys can hear him. I can just turn the background off completely today so that we don't have any distractions there. But yeah, man, it's been so long since we did a duo stream together. It's a pleasure to have you on, dude. We usually, funny enough, we usually do this when Bitcoin breaks out, so it's kind of been a tradition for us.
We're pretty late, man.
Yeah, we are kind of late this time.
The last time that we did this, I think, was that 8-month range in like November.
Yeah.
Of 2024, and then we did one that I remember in October of like 2023, right after Bitcoin broke out. It was also like a 7 or 8 month range. So, yeah, we're keeping the tradition going, man. Every time Bitcoin breaks out of this like multi-month range, here we are.
Yeah, dude. It's been the same meta, so I feel like if anyone did their homework and watched our prior streams during the breakouts, they kind of know what we're gonna say today. But it's gonna be a good refresher, and probably a lot of new participants in the market will get a lot of value out of today.
Yeah.
All right, a lot of people saying you're low. What do you guys think now? Good now, perfect. Okay, good. I don't know what changed, but all of a sudden you're perfect.
Yeah. I didn't change anything. My audio is cutting out because my headset is dying. I'm gonna switch to a wired headset. Give me 2 seconds.
All right, no
you can
problem.
just run the stream for like a minute or two.
Problem. Let's get set here. Make sure Mercury screen's okay. Okay, he's not sharing. Yeah, good morning everyone. A lot of new faces and a lot of familiar faces. Thank you for joining us this morning. Hopefully you guys are enjoying the market pump. I'm just going to say quickly while Mercury's changing his headset, I think you guys know what I'm going to say, kind of continuation of last week where Bitcoin broke out, it held value, and we all know that when Bitcoin is in a position of power, meaning a big breakout and holds value, that gives altcoins a big opportunity to play catch up, and that's what we saw last week off the kind of Monday flush. Bitcoin held range lows, started establishing value. That's like the go signal for alts that this is not a big deviation. This is not going to bleed back out into our 8-month range. It's not going to drop below 110K. It's not going to give people easy entries. And that's kind of the go signal for the risk on or the altcoin market. That's what we've gotten this past week. A lot of altcoins have played giga catch up across the board. We all know ETH is ripping. It's back at 4K. I think a lot of discussion today is going to be on ETH. You guys all know where we're sitting. For anyone who was watching my stream last year in November and December, this is kind of the exact same picture. We talked about this right here, the final boss. And we are back. If you guys have a keen eye, you recognize that every single time ETH has gotten to 4K, it's been a very significant top in crypto markets. This is May 2024. This is December 2024. This is the ETF rally that we got in summer 2024, which coincided with new Pepe all-time highs and Ondo all-time highs, and a couple other altcoins did really well that were kind of ETH-centric, but another very significant top in market. So we're back again. We're hoping for a different outcome, but you know the beauty of being a trader in the market is you can make several plans, right? You can make pullback plans, you can make breakout plans, you can make trend trading plans. So we've got options here. We don't need to, be the idiot that's top blasting right at giga strong resistance. We're going to have plans for that. I'm sure Mercury's going to share some of his as well. Press like so Bitcoin goes up again. Yeah, I'm not gonna shill too much, but I hope you guys hit the like button. We haven't had a guest on the stream in a very long time. I think last year in 2024, I used to have a bunch of guests on. 2025, I've been running solo for most of the year, but hoping to get some legends back on the stream. Makes it more fun for me as well, always discussing with traders and seeing how they attack the market and what changes they've made, any improvements to their own game and stuff like that. What's with the XP? How does it work? I think it's like the more you chat in the YouTube chat, the higher your ranking goes. So it basically ranks people based on the number of times they've chatted. If you want the number one chatter in the stream, just talk more, I guess. We owe it to ourselves to review DOGE today. We'll definitely do that. We'll definitely do that. I think both Magus is in chat and Mercury's on stream. I think both of these legends are always all over Dogecoin whenever the market's strong. So I'm sure Mercury's got some thoughts. Mercury, you back? Just let me know when you're back. Otherwise, I'm gonna keep yapping. I'll watch your stream with Thread Guy. Yeah, dude, Thread Guy is very cool, man. I think people have very strong opinions on him one way or the other, but he was very kind to me. He hit me up. He had a lot of nice things to say, and I had a good time streaming with him. He asked good questions as well. I think he's had a bunch of people on his stream lately. Like, I just started following him. I didn't really follow him or know much about him before he asked me to go on stream. But ever since he did, I started following him, and I see that like every day he's got like some founder of some project or some giga smart trader, some fund manager on his stream. So pretty cool. Solana entry triggers.
Oh.
You back, bro?
Can you hear me?
Yeah.
I'm back.
All right, cool.
How's the audio now?
Good on my
I
end.
didn't mess with anything.
Good on my end. I think OBS is showing
right.
that you should be just about as loud as I am.
Okay. Cool. Yeah, sorry about that.
No worries, bro.
I invested in a new wireless headset.
Nice. You should get a Bear Dynamic headset if you're like at least a little bit of a music enjoyer. Very worth it.
Okay.
That's what I use. I can send you a link after the stream. It was a huge quality of life improvement for me.
Definitely do.
But while you were gone, I just gave a quick kind of rundown of where we were last week, how we got to this week, and basically how we love to see Bitcoin-led breakouts and Bitcoin holding value in a position of power, which allows the altcoin market to play catch-up in a big way. And alts have done that over the past 10 days as Bitcoin has established this value. So I think everyone in chat, yourself, me, has had a really good, 2 weeks. But from here, my thoughts are that I would love to see Bitcoin lead once again. I think the higher Bitcoin goes, the higher the whole market can go. Like the last thing I want to see right now is alts continuing to rip and Bitcoin kind of doing nothing and looking weaker, because that's usually the kind of wouldn't say like cycle top sign, but like more of a froth based sign. I wonder if you have any thoughts on that.
Yeah. So the way that I think about it is really Ethereum is the king of altcoins. So Ethereum is going to be the thing that dictates like general altcoin market strength, but just because Bitcoin is ripping higher doesn't mean that Ethereum is going to follow suit. It just means that it has the possibility to, and we've seen that over the course of the past like 2.5 years or so. So we kind of need Bitcoin to run so that Ethereum can crawl, so that altcoins across the board can rally, and that's just kind of how I think about it. Obviously, I would prefer Bitcoin to go higher. I think that kind of just prolongs the cycle in that sense, kind of like what you're saying. But really, what I'm watching for is Ethereum strength, and that's going to be the biggest indication of general altcoin market strength.
Yeah, I agree with you. So what do you think about Ethereum now at 4K? This has kind of been the Giga Chad resistance for 4 years, and we're once again back, as I've labeled on my chart, the final boss. Pullback or breakthrough? What are your gut feeling?
You know what, man? I think reaction, and I think eventual breakthrough. I don't see us just immediately smashing through 4,000 resistance. I mean, it's a pretty solid resistance level. It's the one that everybody and their grandmothers has drawn on their chart, right? Like at some point, it's going to seem obvious, I would imagine. Oh shit! In hindsight, I probably should have taken more profit at 4,000. Maybe it gets front ran, maybe we see a little bit of an overthrow, but I think somewhere in that general region, I think we do probably see a reaction. But I'm betting that this time is substantially different than any time that we've seen before. And the main reason as to why I think that is because of this Ethereum BTC chart. And it's just such a strong trend, well above these 200 dailies. And we've not seen that in the past 2.5 years. We've seen a little bit of a breakthrough, like where we peek our heads out. We've seen that several times, but we've not seen a clear, like, you cannot debate this. This is a breakthrough. This is an uptrend. This time is different. We haven't seen that. And now we are. And this is the first time that that's happened in, essentially, we can just kind of wrap it up to say 3 years.
Yeah.
I'm not thinking small. I'm not thinking, oh, yay, hey, mom, I caught a move from 2,800 to 4,000. Like, that's bullshit. I'm looking for substantially higher prices. I'm looking for crazy, logarithmic kinds of moves where you essentially forget that gravity exists, right? That's what I'm looking for. Like, we're breaking a trend that we have not been able to for the first time in essentially 3 years. Ethereum has been the meme of this cycle, and now that hated rally kind of thesis is finally starting to, come into fruition. I don't think that's something to scoff at. I don't think that, I'm going to win long term from moves like this by handicapping my thinking to cap myself at 4,000, and I can't like fathom what happens if Ethereum breaks out higher. So 4,000 is the main target. A couple days ago, I tweeted no music in the car until ETH gets to 4K.
Yeah.
Another thing that I've been seeing is like Ethereum started to rally and it just immediately like left everyone behind and didn't really give any entries for pullbacks, but that's not true. This is a very clear, hey, we're doing something different for the first time in 4 months after negative 65% or so. We finally, for 2 weeks, we spent trading at this high time frame inflection point, and anybody, even a 4-year-old is going to tell me that that's a reclaim of that trend and that key level, right? And that's the first time that we did that for 4 months. So the way that I like to think is directionally proportional. And that's just kind of a fancier way of saying, like, we did something for the first time in 4 months, so I'm not looking for a bullshit, 10% move, and then I'm going to call it quits and capitulate a position. I'm looking for substantially higher prices, right? I'm looking for, I don't know, a 30, 50, 60% kind of a move from that reaction, from that event, and then, I'm going to think in that same kind of scale. So then we break down below that trend for the first time in 2 months after a 60% move, and I flip bearish. Because essentially the context on Ethereum from a USD chart is that was a bearish retest of our weekly trend portrayal. So even though we were uptrending on high time frames, we were still downtrending on higher time frames. So I contextualize it. I start to flip my bias. I go, okay, we might have locked in, a more permanent top for Ethereum. And then what ends up happening is the next time that we go to reclaim those 4-hour 200s, that high time frame trend, we're also breaking out of those 200 dailies yet again. So now it's an even bigger inflection point across the board. It's not just 4-hour 200s and, hey, we're doing something for the first time in 4 months. It's the same high time frame trend that allowed for a 60% rally over the course of 2 months, that we're doing it again. We're reclaiming, that range low in Confluence with that idea. And this time we're breaking the weekly trend on Ethereum. The thing that for Ethereum has dictated these kinds of movements the last 3 times that we reclaimed them. Here we are reclaiming it yet again. So I made another post. Hey, the last time that we did this, we saw a 60% movement. This time it's even more bullish. And, fast forward a week or two later, now we're trading yet another 60% higher from that reclaim. And that reclaim occurred over the course of like a week or two. We had several highs, pullbacks, retests, consolidation before that reaction ever occurred.
Yeah, absolutely. I think it's two-pronged here. You mentioned that the trend portrayal flipping gives you an equal and opposite reaction, right? So like a 62% downtrend flipping is significant, right? And you're not aiming for just 10%. Likewise, when ETH consolidates from like 2,400 to 2,800 for like a month or 2 months and breaks out of that, you're looking for an equal reaction to the upside from that break. So especially when you have those fake breakdowns, right? The massive fake breakdown that we got, reclaim of value and send to the opposite side, right? Classic, auction market theory or range break theory, deviation, all the kind of same things that people use to say fake breakdown. Got a massive move from 2,600 or whatever it is to 4K now. Essentially, we haven't hit 4K yet, but I'm sure that we will soon. But I agree with you on the ETH BTC front. I think that's the biggest thing that you mentioned that people need to pay attention to. So ETH BTC, I think there's been a lot of temptation over the past 2 years to call bottom. And we've seen that from several people. Even I took a stab at it at one point saying, hey, I think, the ETF going live last summer could be a strong enough catalyst to give flows to ETH that could change the dynamic of ETH BTC. But you saw the same rejection, right? You showed the weekly trends rejecting once again. And it's been more of the same. But things change when the trends change, right? And you've seen how ETH has dominated the market. If you just look at this from a price action standpoint, we can't deny that this is the strongest move that ETH has seen this entire cycle. The quickest that it's moved to 4K, the strongest Chad weekly candles, the no bid off the 4-hour trend that we've seen over the past few weeks. Like it's been great. I personally think that we'll break through 4K this time, but I have a hard time thinking that the first time we tag it, we're going to yeet right through it, right? So something that crypto cred, or who is it? It's cred that says first test, best test, and I've kind of stolen that from him. So again, this Chad move from 2600 all the way to 4K. I'm assuming first test of 4K should be kind of bearish or give you a reaction in that direction. But if you get a strong enough dip, I do think that dip is for buying because of the ETH BTC factor for sure.
Yeah, I totally agree. And it's like you said with this deviation here, a lot of the times the market is giving you a bigger signal based off of what it's not able to do. So it broke down below a 2-month 60% uptrend, and all that it could accomplish as a result was like a negative 10% push right before we reclaim those exact same trends all over again. So it just kind of shows that like the market is giddy, it's eager, it wants to push this thing higher. You know, that narrative is there, that bid is there, that support is there. So yeah, it was a beautiful thesis, and so far so good. And I don't plan on, you know, jumping off of this until the wheels fall off. So, you know, 4K can get rejected. We can see, you know, deeper pullbacks, whatever. But I'm just going to keep holding strong. I'm going to be profit taking along the way up. 4,000 is a big take profit level for me personally.
Yep.
I do expect some kind of reaction. It would be kind of a fever dream if we just blew straight through and just started making all-time highs. Man, it would be awesome. But like, you know, this is still reality, and I can't lose sense of myself just because the market has been so pleasant in the sense that like you enter a position and 2 weeks later you're up 60%. A lot of the times what ends up happening is we start to like use that as a standard. So a lot of the questions that I'm getting nowadays is like, hey Mercury, I've been sitting in, you know, this coin and it was an outperformer. It's up 30% from my entry, but it's stalled, and now I'm watching like, you know, Pengu or whatever rip 200% higher. Like, is my trade invalidated? And it's like, no, not really, because the same reason as to why you entered is still, you know, still totally valid, but you've just gotten used to, you know, only a week has gone by and I should be up 30% minimum.
Yeah.
So don't kind of, you know, change your strategy based off of the regime that we're in. You should have already done that in the first place for the regime that we were threatening. Now that we're in that regime, it's just kind of, okay, this is a luxury, right? We're getting to my take profits faster.
Yeah.
This is not an expectation, but man, is it really nice when it happens.
Yeah, I think it's hard for people to have patience when markets rip because there's not enough money to send every coin every single day 10%. You see rotations happening, and if your coin is leading 1 week and then kind of lagging the next week, you kind of have that temptation to just rotate money over. You're like, okay, I'm being underperformed. I saw a lot of this personally around me with FARTCOIN. You remember how strong FARTCOIN was in May. And it's kind of just been holding the weekly trends at like $1 for 5, 6, 7 weeks. I had a lot of people around me losing patience in that and just going, oh, you know, I think this is going to outperform, or SPX is going to outperform, or this coin, or Pengu, right? And I want to rotate money. And now you see FARTCOIN up 60% the past week and a half or 2 weeks, and people going like, am I going to get a dip? Am I going to get a dip, right? So I think I did a long thread on this a long time ago talking about FOMO on the timeline and how like coins get main charactered week to week, and people without a plan are very prone to being influenced by coin of the week and wanting to rotate their money just for their bag to rip the next week. So I think if you guys have good positions, all you owe it to yourself is to manage those, you know, make the best decisions possible on those and not try to worry about everything under the sun, because I think it's impossible in crypto to catch everything. I think even if you catch like 5% of the market, you're doing phenomenally well, because it's really impossible to catch everything under the sun.
Yeah, I mean the breadcrumbs, dude. This market is so abundant with opportunity that even if you're catching breadcrumbs, like that alone will be portfolio changing, life changing.
Yeah.
I'm a firm believer in the idea that opportunity is abundant, but that rotation concept, I mean, that's such a fun topic to talk about because it's so contradicting. And what I've found in markets is that every single kind of thing like contradicts itself. So for example, you are supposed to be patient with your trades and make sure that you're letting things run and giving them time. But at the same time, you're supposed to cut losers quickly.
Yeah.
How does that make sense? It doesn't. Those two theories contradict themselves quite literally. So the like connection in between where you have to kind of dwell is that discretion zone, that gray area where it's not that extreme, it's not that extreme, it's somewhere in the middle, and you have to use your discretion to determine which time is it more applicable to be, patient, and which time is it more applicable to be cutting losers quickly. So like with that FARTCOIN example, yeah, neutrality is not bearish, right? Neutrality is not inherently bearish. Slowing down the momentum does not necessarily indicate distribution. It could be, it's 50-50, but it's simply neutral, right? At the same time, if you've been sitting in FARTCOIN as it's traded in a 30% range for the past 3 months, you're missing out on all the other things that are running hard and actually showing momentum. If your objective is to be a momentum trader, then you should have switched over away from FARTCOIN and into something else 3 months ago, 2 months ago, right? Like there is something to be said about it's good to be patient. It's good to not invalidate positions when they're not invalidated. But at the same time, you need to be able to actually capture opportunities in this market because these opportunities, even though they're abundant, the real opportunities that we're here for are very infrequent. And I always call back to that Pareto principle, which is 20-80. 20% of the time that you're trading this market, it's going to be what you dream of. It's going to be that alt season, the crazy rallies, what we're all here for essentially. And if you look back on just Bitcoin alone, this is a beautiful example. There's really only 6, maybe 7 rallies. I'm going to argue there's 7. You could probably argue that there's 6. 1, 2. I like this one. This one's debatable. Oh, sorry. 3, 4. This is 5, and this is 6, and then this would be 7. There's 7 rallies. This encompasses 3 years worth of price action, right? Really 2.5. So if you've missed even one of these rallies, if you're not doing par, right, as a momentum trader, I curated my system for this kind of market movement. So if I'm not capturing these rallies, I'm not even meeting my standard. It's not even par, right? I'm underperforming. I'm allowing my discretion to handicap my system, the strategies that hold me tried and true. You really have to make the most out of this market. You have to overcompensate for the inevitable bullshit that you're going to have to endure, regardless of how well you traded this market during those crazy rallies in the first place. You are going to incur slippage. You are going to buy a reclaim of a trend, and it's not going to be a reclaim. It's going to be a fluke, fake out, bull trap, sweep of the highs, whatever, right? You are going to get a false signal. You are going to make a mistake and wake up one day and say, I should market close this position and put yourself in a worse position as a result. You are going to have to endure those things regardless. You have to make the most out of this market. So if at the same time, these are not mutually exclusive thoughts. Yes, you might want to hold FARTCOIN, it's just in a range. It doesn't necessarily mean that it's bearish. At the same time, you need to be capitalizing off of this market environment. So, either one is either cope or just arrogance. You don't want to be either. You don't want to be coping. You don't want to be arrogant. You want to be somewhere in the middle.
Absolutely. Yeah. I think wise. You know what? I have a question for you now, though. If hypothetically speaking, you were exposed to FARTCOIN in May, right? At what point would you, as a trader, say, okay, this is underperforming. It's time for me to rotate out? Do you have a signal for your system that goes okay, it's time for me. This capital is dead. And how long do you give yourself for that?
Yeah, so I actually have a thread out there about the FARTCOIN setup where I spotted strength preemptively. I entered this position here, and I actually closed it somewhere around right here. So I got 0.6 R on that trade. Or no, I closed it right here, sorry. 0.6 R, and the trade essentially looked like this. Entry here, stop loss here, take profit here. I fucked it up. So I ended up taking other positions on FARTCOIN because it was an outperformer at the time, and it continued to be. But I was riding this rally, and a big position that I had, one of the small positions was like this, and took a re-entry trade off of a range low and local trend. And then another position was simply buying the 4-hour 200s, because in hindsight, my discretion said that's probably the trend to be using. So 4-hour 200s, and then bought this range high retest to support as Confluence, hit stop below here, targeted continuation into this resistance, and into price discovery, right? Because remember, this is the market environment where I am allowed to dream big. I'm supposed to be thinking logarithmically, If I'm comparing back to the normal market, then I'm essentially contradicting myself and the entire reason as to why I curated this system. So I'm just riding the momentum through. I don't have a crystal ball, don't know that this is the top until after we lose that trend.
Yep.
Once we lose that trend, that's all of a sudden my thesis is no longer valid. We are not going to price discovery. We're going lower, right? This resistance was successful, and not just because it rejected us, but also because we're showing objective weakness in the market. When we reclaim that trend, I go right back to the same mindset as to which I had to begin with that allowed me to spot that strength in the first place. So I always refer to this is plan A. Plan A is, guys, we're doing something different for the first time in 4 fucking months after FARTCOIN is down negative 90%.
Yeah.
Maybe we get a different outcome, right? Like, not that, like spectacular of an analysis. Maybe we get something different now that we're doing something, substantially different. Then we ride that trend for 400% or whatever the fuck, right? 400% over the course of the next 3 months. Oh shit, guys, we are doing something different than the past 3 months, and 400%. Plan B. Ditch this plan, throw it into the garbage bin. We're wrong. Finally, we had a good time, right? Plan B, okay, we're probably going to go lower. Plan A, part 2, meaning we're doing the exact same shit that we were doing back here. Run it. Like, send it back turbo. And this doesn't work for FARTCOIN. When I made this analysis on Ethereum, it's the same exact idea, right? Ethereum reclaims 4-hour 200s, 60% rally, loses that trend, measly negative 10% pullback, reclaims that trend again. Here we are trading 60% higher 2 weeks later, right? When it doesn't work for FARTCOIN, oh wait, no, plan B again. No, plan A again. No, plan B again. No, plan A again. No, plan B again. It's obvious, right? At that point, oh shit, wait a minute. I need to take 2 steps back. The thing that was previously alpha is now getting absolutely obliterated. This is not a trending market anymore. So we are now in a range. Ever since then, that's where I divert my attention away from FARTCOIN and into things that are showing more momentum. Because at that point, I'm being forced into plan A worked for 3 months straight, 400%. Plan B worked 2 weeks, negative 20%. Plan A didn't work. Plan B again doesn't work. Plan A part 2 doesn't work. Plan A. At that point, let's go into plan C, take 2 steps back. This is not a trend anymore. This is a range, and it's only not going to be a range when we break out in either direction.
Yeah.
And that's when trending market and mindsets are applicable once again.
I think so what I teach and love to do when it comes to ranges and trends is I just kind of, I have enough data to prove this, is when the trend that carries you into kind of a parabolic move like FARTCOIN here for 8-9x or whatever it was from the Pico bottom, when that breaks, it's going to lead to one of 2 things: either a massive pullback into the next high time frame trend or support level, or a long-standing consolidation or range, right? So those are the 2 things that I just kind of default to when a massive parabolic move breaks. And it worked out pretty well in FARTCOIN. I actually left myself kind of like wanting the 60-cent level. I think you have it marked on your chart as well. I was kind of hoping that we'd bleed down to there. When we didn't, and we started holding and reclaiming and consolidating at $1 and put in a higher low, that was my signal to start buying FARTCOIN. So I think that exact area that you circled was my first buy on FARTCOIN after the kind of breakdown happened. And it's worked out pretty well so far, right? I think people that held FARTCOIN this entire time, maybe they exposed in May, maybe they've had it since last year, I think they've kind of pulled their brain out or pulled their hair out and just gone like, this is chopping for like 3 months, 4 months, I can't handle it. But if you just generally understand that, trends breaking lead to either ranges or big pullbacks, you can sit on the sidelines and just wait for a signal. Like, I was completely wrong. I tweeted, I think twice, that I'm waiting for 60. 60 never happened, but thankfully as a trader, you have backup plans. You're not just sticking to one plan. Okay, that signal never hit. I have no opportunity to buy this, but holding and setting a higher low at $1 for me was a very strong trigger, as well as Bitcoin. I think Bitcoin looked phenomenal back then. If we go back to like late June, I think reclaiming, this was after the World War III FUD. Yeah, exactly. So you had a signal, Confluence signal on Bitcoin alongside that. I think that was just beautiful.
Yeah. Man, I was going to say something that I forgot. I had a
It's all
brain
good.
fart.
The next topic I wanted to talk about is like, do you look for confluence around like assets in the market? So if like, for example, we see ETH at resistance right now, and you're looking at another coin like Solana, maybe at $200 resistance, and FARTCOIN at $1.60, right? $1.60 on the weekly is massive resistance. Pepe at 14 cents is massive resistance. Is there anything in your mind that kind of goes like, okay, I'm seeing multiple assets at resistance now after they've run for 2 weeks. Maybe I take a step back from looking for new trades. So this topic is mainly for people right now that are sidelined, underexposed, looking to buy things. What would be your advice to them at this moment?
Okay, so I never look for that stuff. I don't go actively search for it. I don't, scan the market and say, okay, is everything at resistance? Because that would make me feel good. It just falls into your lap that way a lot of the times. Like you just happen to like a level that you have marked out on Aave from 5 years ago, just so happens to be we're trading at it. And we also, when you go to the Ethereum chart, we're also trading at $4,000 resistance. Like it just falls into your lap. And I think that there's a big lesson in there. That concept, that idea applies for a lot of things in the market that I found. I don't know a single super forecaster that I respect that calls themselves a super forecaster because they're not actively calling themselves, right? They're not actively trying to participate in that venture. It's just so more often than not, it just falls into their lap. The stars align. It could not be more obvious. It just makes so much sense to them. So they give their prescient kind of forecast, and more often than not, they're correct because they have that higher conviction, that higher confidence in that idea. So I'm never actively searching for signals in the market. A lot of the times the signals just fall into my lap. I'll go look at the market and I'll see Bitcoin losing high time frame trend and also, oh shit, here's Aave losing its dedicated high time frame trend as well. They might be two different time frame moving averages. Like for Bitcoin, I'm using 6 hour 200s. And that has been my high time frame trend portrayal for the past few months or so, right? Just because that's in my discretion what Bitcoin respects the best. And I only use 200 MA and 200 EMA, so I got to switch around the time frame. But on Aave, I'm using 3 hour 200s. So it's totally different, right? But a lot of the times I'll go look at, my Aave trade, and even though I'm using 3 hour 200s and on Bitcoin I'm using 6, they're doing the exact same thing. Something that I would advocate actively to stay away from is monitoring your altcoin positions based off of whatever Bitcoin is doing. So a lot of the times people will handicap their thinking and contradict themselves because here's the greatest fucking contradiction in all of crypto. You ready for this? Hey, I'm only trading altcoins because they're stronger than Bitcoin. Oh, okay. So, how's your portfolio doing? Oh, I'm down negative 80%. What? You just told me that you're not trading Bitcoin. You're not trading this thing that is ripping 700% higher over the past 2.5 years because you're trading things that outperform it. So how are you drastically, substantially underperforming? It doesn't make any sense. So if you're actively trading altcoins, the only reason to trade an altcoin is because it's going to outperform whatever Bitcoin is doing. It's relatively stronger. That is the only purpose as far as I'm concerned, as to why they even exist in the first place.
Yeah.
Right? Most of them do absolutely fuck all. Let's just be honest. If you are making this argument that I need to, take my profit on Ethereum because Bitcoin made a lower high, you just missed out on an additional 40% uptrending move on Ethereum. The only reason to trade Ethereum is because it's outperforming Bitcoin, which directly means that Bitcoin is relatively weaker than Ethereum. So if every single time that we're in an altcoin and things are going well, we go, oh, but Bitcoin looks weak, which it has to look weaker because the only reason is why we're in that altcoin, right? Then you're just handicapping your thinking. You are shortcutting everything. You are making sure that you underperform, that you undercapitalize on the infrequent opportunities that this market gives us. 20% of the time, we actually trade in a bull market-like fashion.
Yep.
If those opportunities come by and we're always pretending, oh no, why would I hold my blah, blah, blah position that's ripping 200% higher if Bitcoin put in a lower high, right? If we're always doing that, we're always contradicting ourselves. We're always never going to be that person that is like, hey, on this next dip, what am I gonna buy? We're gonna be, oh shit, should I enter now? Because what if we dip, right? What if we pull back? So I'm all about, instead of trying to tackle symptoms like FOMO, FOMO is a symptom. FOMO is a symptom of not having been able to negate the fear of, what if I buy this reclaim and it's a top, it's a fluke, it's a fake out, it's a bull trap, it's not actually a reclaim. Because we had that fear, now the fear that we've substituted it with is, oh shit, what if the market goes higher without me, right? So fear is inevitable. Fear is always going to plague you no matter what. But if fear is inevitable, then it's redundant. So we should just trade the market, whatever it's doing,
Yep.
as objectively as possible. And that way we can't possibly be the person that is like, stricken with all these, crazy thoughts and fears and subpar options. Do I want to market buy after everything has ran 30% higher the past 5 days? Or do I want to continue to sit out and hope and pray for a pullback? Like, those are sub-tier quality options that we've given ourselves, all because we're constantly worrying about fears, right?
Yep.
So if we cure causes instead of trying to treat symptoms, we won't have these questions to ask ourselves in the first place.
Yeah.
And then that's the real remedy.
So the reason I brought this up is because I've been getting asked the question a lot, I guess over the weekend. Dino coins were running and people have the PTSD of like, oh, every time Dino coins run, that's a local top. Doc, what do you think? Are you going to de-risk here? Are you doing whatever? And my advice always is to manage the trades that you have open, right? So if there's warning signs on the trades that you have open, or if there's significant resistance, manage those positions accordingly. Don't try to look for X reason or Y reason across the market, right? I think the thing that people love to do is when we break out on Bitcoin, they hunt and hunt and hunt and hunt for top signals every single week. And when the true market shifts, trends are lost, market structure breaks, consolidations break down, they refuse at that moment to believe in the top, right? So, TLDR, the reason I ask you this question is any trade that you have open right now, I think you owe it to yourself to manage that trade and not look for reasons to manage it via X, Y, and Z across the market. So yeah, and then it works in the other way, right? We talked about FARTCOIN hitting support, Bitcoin reclaiming a trend. That is a pretty good Confluence signal, because that in that environment, if Bitcoin is going to break out, if this market's going to go risk on, if we're going to break out over 110K, Bitcoin's got to lead. We know that as a fact, right? We know that Bitcoin's got to lead the breakout. Altcoins are not going to lead the breakout. So it's kind of different there. You can look for Confluence on alts at support when Bitcoin is also showing a lot of strength, but you also don't want to go to the extreme and just be like, oh my God, XRP is pumping, or, XLM is pumping. I'm going to close my X position. I'm going to close my ETH position because of that, right? Now it's a different story if ETH is trading at 4K and you kind of know, hey, that's resistance. I should take some profits here. So that's kind of what I've done with some of my positions, right? FARTCOIN from $1 to $1.60, giga strong weekly resistance, take some profits. Pepe running from 90 cents to, or whatever, 90 to 140. There's so many zeros, I don't really know how to call it, but from 90 to 140, right? Mega pump 50%, take a little bit of profits. You can always get back in if resistance is broken. You get a retest and continuation. So
yeah. Magus and everyone is saying in chat that you're not in streamer mode. So Magus is messaging you and the stream can hear it.
I'm not in streamer mode. I don't even know what that means. What the hell is streamer mode?
They hear your Discord notifications every time you get pinged.
Oh, okay.
Yeah. Probably just mute the notifications.
Hold up, I can do that quickly.
Yeah, so a really big thing as you're doing that, a really big thing is people ask if I need to have the right framework for the right market environment. How do I know that we're in that market environment to start applying that mindset? So it's very simple. All you have to do is be honest with yourself and be objective as possible. So I put out a post the other day that was talking about, and a lot of people are asking, can I have your thoughts on Dogecoin? I put out a post the other day that was talking about Dogecoin and how it breaking out and showing the strength. A lot of the times people apply this very generic, very standard, static kind of mantra where Dogecoin pumping equals froth equals this is the end, hope you had a great time, recession incoming. But that's really only applicable in a bear market. So then the question is, how do you know if, we should be applying that mindset? All you have to do is ask yourself, right? And so somewhere around here, I remember putting out a post that said, hey guys, every single time that Dogecoin has rallied 20, 30%, plus in a daily candle, it has always marked the top for the entire crypto market, right? And that's a very static, very standard, straightforward application. every time we do this, it always equals this, right? But that's because even a 4-year-old can tell me that this is a downtrend on Dogecoin, right? All of a sudden, we start coming back, a year and a half later. Oh my God, if Dogecoin is rallying, it must be over. No, it's not over. It's just getting started. Oh my God, Dogecoin is pumping today. Remember, every 20% candlestick, marks the top for the entire market? No, it's breaking out of a year-long range for the first time in a year, minus this fluke, right? We're showing objective strength. Objectively, you cannot deny we are definitively doing something different that we have not managed to do before, minus this one time. So the regime changed, right? The context changed, the environment changed. So your framework mentally should also change. It should be, oh shit, the same thing that was a oh shit indicator, this is the top, have fun staying poor, is now this is about to get even crazier. Retail is actually here. We're actually playing into the entire reason as to why I joined crypto instead of Forex in the first place. Run it. Just fucking run it, right? Reclaim high time frame trend for the first time in 3 months. Objective strength. Oh, top indicator, top indicator, no, run it, dude. Run it. It's not an overcrowded trade. If anything, it's not crowded enough, right? That's how we should be thinking about it. It's the same thing applicable to today's market on Dogecoin as well. We put out, several posts in my Discord talking about how when Dogecoin reclaims this trend, I'm on top of it, because the last 2 times that we did that, it was respectively almost an 300% move and a 200% move, respectively. So I am not looking for a measly 40% rally. Only in crypto can we call 40% rallies measly. That's not what I'm looking for. I'm looking for substantially higher, because the context is exactly that of which as to what drew me to crypto in the first place. And that is very obvious from an objective manner. That's not guaranteed, oh, we have to go 200% higher minimum. That's not what I'm saying. But that is the anticipated outcome. That is the primary thing that I'm positioned for. And that's just based off of objective context.
Yeah. I think one of the beautiful things about being a trend trader or trend respecter is you're always going to catch at least the middle 70% of a parabolic move. You're going to give some up on the top. You're not going to enter at the bottom, but you're going to get very clear signals for the meat of the move, right? The bonus is if you add a little bit of price action, a little bit of discretion, you can get a little bit better exits towards the top, right? You're showing a super high time frame trend here. I'm sure if you break it down to a lower time frame, you're going to find a much better exit along that parabola that's going to be super clean towards the top, right? So, right there you go, right? Almost perfect. Maybe you gave up 5-10% towards the top. You're getting SFPs into resistance or whatever. You're losing a trend. Maybe you don't bite on the first or second SFP, but once you get that trend breakdown, you're kind of going, okay, something is significantly changed. This trend is held from exactly right there, right? So it's almost perfect. One thing that's like a coin right now that I think is respecting this perfectly is Hyperliquid. So I'm going to pull it up on my chart real quick, and then you can do yours. But Hyperliquid, I think, is just so beautiful off the daily trend. Someone in chat asked, so I'm going to bring this up. Wait for it to load. This flipped right at $14. We've been holding the daily trend since $14. Anytime anyone asks me about Hyperliquid, I'm always just saying, be simple if then plans here, right? The one time we got this breakdown, I was saying we could possibly trade all the way down into the weekly. If it does, that's a giga-strong buying opportunity. If it doesn't, we reclaim. How many tests of this or respects of the daily trend do you need to get back on board if you're really bullish on Hyperliquid? You got 1 here, 2 here, 3 here. What happened over the weekend going into Friday, Saturday? You got another test here. So you keep it simple on Hyperliquid. Be bullish on it as long as the daily trend is there. Once the daily trend breaks, you open yourself up to the same thing we talked about. Either it's going to pull back all the way into the weekly, the next high time frame level of support, or it's going to lead to a big kind of distribution consolidation up at the top, right? I've tweeted this out multiple times. We talked about it on stream, right? When a significant parabolic trend breaks, you want to be a little bit more defensive, right? Mercury said it a bunch of times this stream as well. Like the trend of portrayal is shifted. You're looking for an equal and opposite reaction, unless that is shifted back to the bull side, right? You have the exact same trends. I'm going to shift to your chart now. Not exact same. We use a little bit different, but almost the exact same signals on yours versus mine.
Ooh, this Hyperliquid chart is like I don't know, man. It's just so clean.
Yeah.
It's just so clean. I've been talking about this. I've had a great time trading this. Oh my God, it's just so clean. This is the beautiful representation of plan A. Just turn your brain on really quick and then turn it off and just leave it off, right? Like we're doing something different. Sure, you said the same thing back here. It is what it is. Flukes happen, deviations happen. Make sure you still have that courage because once we lost that trend, hopefully you're adapting to that information yet again. Traders are only ever as good as their ability to adapt. And then from there, we went literally another negative 50% lower. So you were um, rewarded by just simply being able to be fluid. So be fluid, continue to be fluid, and the next time that you put that capital, your hard-earned money on the line, and you take that bet, you are rewarded with a 250% movement over the next 2.5 months. We lose that trend yet again, and this is where I actually cut a position on a hyperliquid entirely. And for the next 3 days, I dodge a negative 20% sell-off. And so I think a thing that really needs to be mastered, and especially in bull markets, is people always tell you buy low, sell higher. But the way that you're going to do the best in bull markets is by being able to buy high and sell higher. You have to be willing to buy high and sell higher. You have to have some kind of structured framework to be able to justify, okay, I cannot continue to target the bottom right corner. I need to get back into this trend. I need to give it another go. Maybe this is just going to reward me the same way that it did 2.5 months ago. And that was the thesis that I mean, seriously, if anyone follows me very actively on Twitter, you know I wouldn't shut up about this. I just kept talking about this Plan A Part 2. We are doing it yet again. I gave, updates semi frequently, every couple days, every week, whatever. And here we are, 30, 40% higher since then. And all we've done so far is resume the exact same concept that rewarded us initially to begin with. So it's beautiful, right? Trading in terms of like comprehensive ability is very simple, it's very easy. But actual execution, mastering your emotions, having the discipline to put on trades, being courageous enough to allow trades to play out, the execution part is where everyone fucks up because that's actually the hardest thing that you will probably ever do in your entire life. The framework, though, the analysis, the concepts, the winner psychology, all that, very straightforward, very easy.
100% well said, man. I want to ask you one more question since we haven't talked in a long time. Are there any improvements to your trading that you've made over the past year? Is there anything that you feel like that you've improved upon, whether it's psychology or technical or anything like that? Because I think it's very important to as traders, once we get profitable and we're consistently profitable, we have like a winning edge in the market to continue kind of pushing forward and not get complacent in our strategies.
So I haven't made any substantial improvements, mostly just because most of the improvements that I would need to make are all discretionary. So,
Mm-hmm.
like for example, my FARTCOIN trade that if I draw it up, it looks absolutely ridiculous, but it was a banger setup. Um, so the FARTCOIN setup looked like this. Oh, what the hell, TradingView? TradingView does this
It's
all the time.
yeah, it's because of the log,
It's
I
so
think.
weird. Yeah. Um, my FARTCOIN setup looked like this. 16R trade, right? Absolutely killer. Just like fucking ridiculous kind of setup. I fumbled it. I closed it right here and I captured 0.6R, not even one full risk amount. That's a flaw, right? There was no reason for me to actually cut that position. It was purely mental. It was whatever I had going on in the market. If I'm being honest with you, it has a lot to do with the fact that into this position, I was coming off of a 3 or 4 trade losing streak. So like, dude, I'm not Marcus Aurelius, right? Like I'm not the author of Meditations. I'm not the grandfather of Stoic philosophy. Like I'm not that guy. I'm still human. So all my flaws are going to be discretionary, and it's going to be slow and steady refinements over time, gradually. Especially because at this point, I've been trading my system for 5 years now. I have been consistently profitable, regardless of up, down, or sideways, for 5 years straight. And the way that your learning curve goes is you start off slow and you start to really enter that learning curve phase. This is after the Dunning-Kruger effect, we're
Yeah,
assuming.
yeah.
And then, once you start to plateau, all the refinements from there, this is the past 3 years of my trading. It's not to say that I'm still the same trader that I was 3 years ago, but it's just to say that any improvements that I'm going to make from here on out are very subtle and they don't really have like a direct impact because I'm just finding like bits and pieces of price action or occurrences in the market where I'm like, oh, I should have traded that better, right?
Yeah.
But other than that, man, like there's not too much room for, oh, let's throw in this crazy concept that I haven't, ever thought about in the past 5 years. That's not a thing in today in my career.
Gotcha. Gotcha. Well said, man. I think where you and I differ there, I'm always a little bit concerned that, hey, the meta is going to shift or this is going to happen. Bitcoin volatility is going to calm down. We've seen it this cycle, right? 8-month ranges. We haven't had that in prior cycles. We kind of just go parabolic up, parabolic down, right? Bull market, bear market, it's kind of over, no opportunity, whatever the sayings are. So as the market has shifted, I ask myself, is there ways that I can extract max value in these ranges? Is there other edges I can find? Are there other time frames I can trade? Are there other tools that I can use? And for me, that's the most fun because once you establish something and you're good at something, it's kind of just rinse and repeat. Do you have the patience to wait for those setups? Do you have the discipline to execute them when they appear, right? It's kind of like this well-oiled machine, finished product. And I think in all the other time in the market, I'm always trying to say, like, I think it's the most fun to look and challenge yourself for other things. So that's kind of something that I've been focusing on over the past year. I don't think we've talked about it too much, but a lot of my trading has shifted from 1 hour, 4 hour charts into 1 minute charts, right? And I've found that very enjoyable, and it's given me a kind of like a way that I can clock into markets and clock out at the end of the day and not really have to worry about positions overnight and not check my phone on weekends when I'm hanging with my friends and stuff like that. So I think there's just a lot of fun, right? Markets are just this big playground, and you could play soccer or football and basketball, and you could play a bunch of different games. But at the end of the day, what is the game? How do we extract value from markets? And there's so many ways to do that.
Yeah, I think it's pretty incredible, right? Because where you find comfort in that and clarity, and you're able to reduce a lot of the FOMO and mitigate some of those fears where, like, oh, I'm not Marcus Aurelius, like, oh shit, like, I'm still human,
Yeah.
on the 1 minute time frame, uh, I actually lose that confidence. So I feel the opposite, where I start to, like, give up more of my time and more of my clarity from outside of the market. I stop trying to, do renovations around my house and I start trying to, mitigate FOMO or, catch positions or whatever, or overcompensate for drawdown, whatever, on lower time frames and give more of my effort to this market, I actually end up hurting myself more often than not. So I don't find comfort and clarity in doing that. I find the most comfort and clarity in trading the market the same way that I have for the past 5 years. And that might be very boring and generic, but it's also been massively profitable and life changing, not just for me, but also the people around me.
Yeah.
So it's like, if it ain't broke, don't fix it, Mercury. Like I'm just gonna keep doing the same shit that has consistently worked, and I've seen up, and I've seen up to a little bit of degree. I've seen up, 300% in 3 months. I've seen down a little bit. I've seen flukes, fake outs. I've seen down negative 90% in 4 months.
Yeah.
I've seen sideways in the form of 2 weeks ranges, 3%, and I've seen sideways for 8-month ranges in a 15% range.
Yeah.
I've seen everything that there is possibly to be seen in this market, and yet my portfolio is trading at new all-time highs.
100%.
What is there more to do? Why do I need to feel like I need to be overcompensating for something? Just stay the long-term path, right? And just keep heading towards that same direction with the same goal, with the same passion, with the same fire. And something that I talk about frequently that I feel gets under discussed is burnout. Burnout is real, man.
Yeah.
I've been trading this market since 2017, and the burnout that I experienced in 2018 through 2020 was, I was the person with my head down trading this market 16 hours a day, 12 hours a day, taking hundreds of trades a day. I did do that, and I burnt out very quickly, and I became a shell-like, corpse-like version of myself. So now it's my main goal in markets is not to extract the maximum value. It's not. Because if I were to do that, then really I shouldn't be a momentum trader. Because like you said, all we're really doing is capturing the meat of the move. I'm not buying the bottom and selling the top though, right?
Yeah.
I'm not trading the 1 minute time frame and capturing every 10% movement up and down. I'm not doing that. My goal is not to maximally extract value. My goal is to extract value in an efficient manner whilst giving the least amount of myself and my mind share, my headspace, my effort, my energy to this market.
Yep.
And I've accomplished that successfully for 5 years in a row.
Yep.
I do not feel nearly as burnt out as what I did. I have been able to, establish a relationship, marry the love of my life, et cetera, right? Like spend time with family, all this kind of stuff. I feel good in that, And I think there's going to be a lot of issues when you start to compare yourself to other people, or if you give yourself this like perfectionist mindset where you try to capture everything in the market or every little tiny movement. Perfectionism is the enemy of greatness. So
yeah, so
that's my mantra.
One of my favorite things about talking to other traders is like a lot of this comes down to like personal temperament and understanding yourself. It's this weird thing, and maybe you can relate to this, but a lot of traders that I've talked about have said something similar, where trading has taught them a lot about themselves. Trading has kind of made them a better person. It's taught them about discipline, patience. It's taught them what their actual core mental weaknesses are, because it all gets displayed, right? Trading is you versus you. There's nothing else, right? There's no one that you're competing against. You're competing against yourself. You're trying to beat your former self. You're trying to analyze your weaknesses in the market and improve on them. And what you find comfort in, right, may not be what I or someone else finds comfort in. So it's not a kind of one system fits all or one trade fits all market. It's about finding what you're comfortable with, what your edges are, how your temperament works, and then kind of crafting a system around that, right? So one of my weaknesses, a thing that I was finding very difficult, like you mentioned with burnout and 16-hour days, that's something that I did from 2022 all the way into late 2024. I was mainly a trend trader, and I picked a time frame that's very difficult to trade because markets in crypto are 24 hours and there's 6 4-hour candles a day, and you don't know if you're going to get your trigger at 3 in the morning or 6 in the afternoon. You don't know if you're going to get it when you're out buying groceries or you're sleeping. And I opened myself up to kind of like, I always got to be active. Weekends, days, nights, everything like that. And I had to find a way to kind of combat that. I was like, okay, either I go even higher time frame or I go lower time frame, right? There's got to be a way that I can get a work-life balance, so I'm not just always addicted to looking at my phone and always kind of on edge and wondering what's going to happen at certain times. So it's very interesting to talk about markets with other traders, because we all have our kind of ways that we see the market, way that we kind of analyze ourselves and improve upon ourselves and find ways to extract value. So it's really cool, man. Also, very, big congratulations if I haven't said it on stream. I know I met your wife recently, but yeah, congrats again on the house and the marriage and everything like that. Very cool, man. Love to hear that.
I appreciate it, brother. Yeah. It was a pleasure to meet Doc in real life, by the way, guys. He's just as humble and genuine as he is, coming off of these streams as he is in person, so.
Yeah, it was cool, man. We got to
just to put that out.
We got to share a nice meal together. Unfortunately, we didn't have much time. I think you had to do stuff, I had to do stuff, but at least we got that luncheon together, and I'm sure we'll hang out again soon.
Yeah, absolutely, man.
Yep. All right, should we shift focus towards chat? Chat's been quiet and listening to us yet for the last hour. If you guys have any questions you want to throw our way, I'm sure we'll be happy to answer.
Absolutely. Happy to answer.
Yeah. Anything new going on in life? I know you're doing a lot of construction on the house and getting that set up recently.
Man, I've been crazy busy. I've been doing some vacations that I had pre-planned from like last year. A buddy of mine is getting married, and I'm one of his groomsmen, so I just got back from a little bachelor trip, and I'm trying to like coordinate. I have like 3 or 4 different contractors coming in and out of my house the past month, just kind of like doing different stuff for me. So I've been kind of spread thin, I'm not gonna lie, but I'm staying up with it. I'm pushing through.
Yeah, man, I feel that. So I recently got a house. I moved across the country, and it's very difficult to move across the country because, finding a place and then, traveling and seeing realtors and all that shit wasn't easy. So I kind of picked the first, good place that I can find, but it's not the sort of forever home. It's kind of just the way to get into Florida. So there's a lot of stuff around that house that needs fixing, and I'm kind of just putting it off. I'm like, this is just the placeholder. We're going to find another place. So I haven't had to deal with much of that stress that you're mentioning.
Yeah.
Yeah.
I know. All right. Someone asked for SOLETH chart. Are we looking at my screen right
Yeah.
now?
Yep.
Okay.
It's kind of like you pull up the
this looks
chart,
like a
there's nothing
breakdown.
else to be said. Chat should know exactly what you're going to say.
Absolutely. Yeah. And isn't that beautiful, by the way? Like, you already know what my bias is. You already know what I'm going to say because you already know what the analysis is just by looking at the chart.
Yep.
And again, I think there's a lot to be said about that. I have what I call a 4-second rule, where if you can't tell me what's happening on the chart within 4 seconds, move on. Go do something else. Because I promise you, my little cousin could tell me what's happening on this chart, and he's 5. Like, there's really nothing more to say about that. So yeah, objectively, this is a very bearish looking chart. It's obviously trending downwards. We just broke down below this 8-month range or whatever, and back inside of this 8-month range, which does imply to me we're just doing the normal thing in ranges once again now that we re-entered this one. And the normal thing is for range lows to go to range highs and range highs to go to range lows. Range highs, range lows. Which coincides with the idea that this was an uptrend and now it's a downtrend. So
100%. I do a lot of the same stuff on my stream, so I'll explain the concept one time using one chart just for the entire chat to hear, and then when they ask me about another chart, I'll just be like, what do you guys think? Right? You already know what I'm going to say.
Yeah, absolutely. Yeah, I like 2-hour 200s here as a still high time frame, but lower time frame, more actionable analysis available. So let's say if we ever get to a point where there's a big discrepancy between like inflection point to inflection point, like 200 dailies are right here, but 2-hour 200s are right here, and price reclaims these. This is a pretty good chunky movement where we can try and capture a pretty substantial move, right? It's a 30% move of outperformance from Solana into Ethereum. And that's probably just going to be shown when we go look at Solana USD chart. It should probably just be, coincidental, Confluence. When we go look at that USD chart, it's breaking out of a range, reclaiming a key level, et cetera, et cetera. And then we look at the Ethereum chart in comparison, it should be the same thing.
Well said. I found this question interesting. How do you make the distinction between chasing and rotating into strength? I'll give you an example of something that I did recently. Let me pull my chart up real quick. One of the things that I did recently was pick up a position on virtuals because the high time frame chart looked pretty good. Let me wait for everything to load. This isn't the one. It's this one, I think. There you go, right? We spent a significant amount of time below trends, below support. We reclaimed, and this was a nice trigger for me. This was a move that I thought from a technical standpoint looked fantastic. Reclaiming the weekly, reclaiming the daily, breaking back out of this deviation right here, and we pushed up. Right, this was a Sunday move where Bitcoin made, I believe, new highs. It pushed out of range. A bunch of other coins pushed out of range, and virtuals failed to put in that kind of strength on this move. That was a signal for me that, hey, when the market is risk on and we're pushing up and we're making new highs on a bunch of different assets, ETH is making new highs, Pepe is making new highs, FARTCOIN's making new highs, but virtual is making a lower high. For me, that's a good opportunity to take profits or cut that position. And if there's a pullback coming on the markets, look to reposition into a coin that is actually making higher highs, right? So that's something that I did. I know you guys could see like virtuals here is still trending up, but if you compare this to other coins in the market, like ETH, for example, or Pepe or FARTCOIN, those have made significantly higher highs since this July 13th candle, right? So that's an easy way that I look at it, right? I'm just saying, okay, when the market is risk on, when a lot of assets are moving and I picked up a new position, it's underperforming other things in the market that have better trends. Even if this setup looks good, if it's not giving me the juice that I want, that's a signal for me to kind of take that money, rotate it laterally into a position that looks a little bit better. And that's worked out for me several times. So that's kind of how I do it.
I like this question. Ethereum open interest is nearly $6 billion more than its last local top in December. Is this indicative of a flush needed? No. And the reason why is because the extreme funding or open interest or whatever, right? A lot of the times people will make this argument, oh, funding is extreme, right? And I know that we're talking about open interest, but it's the same concept. So in order to be a trend trader or trend respecter, where we're capturing, crazy, double digit, triple digit percentage moves in this market, like what we're here to do, we have to watch the RSI bearative, fools get absolutely obliterated 18 times. We have to watch as people said, oh, this is frothy, open interest is crazy, and they were wrong because the next day we're up another 10%, 80 times in a row, right? We have to see this happen. It's just like with funding especially. Think about this. Funding is extreme because the market is going higher. Oh, you mean to tell me that people want to be long in a bull market? Go figure. Like, thanks, Sherlock. Like, okay, and it's redundant information. It is false signal after false signal after false signal, and then eventually what ends up happening is Ethereum does this, right? And then some cringe guru that has been making the same argument for the past 2 months in a row and 60% higher is comes back to say, oh, see, the funding was crazy, peaked out, it was extreme, it was the highest that it ever was. It was so obvious that that was a top on Ethereum, but the funding today was extreme in comparison to the funding yesterday. But the funding yesterday was extreme in comparison to the funding of the day before, and the day before, and it's just a repetitive concept. So like, I'm pretty sure if I pull out Bitcoin and I just go to funding, the actual indicator, I think it'll prove my point. I'm pretty sure it will. This might be negative aura if it doesn't. Well, oh well, I have to be on BitMEX, I think. If this chart still exists. Ah, damn it. I need a funding indicator for... I wonder if Bitstamp will work. This usually works. I haven't done this in a while. But if we did have this chart up, unfortunately I don't, you would see that the funding, the spikes were like heavily premium, like somewhere around here. And then when we get to here, they're just even more premium. They're just even more extreme. And then when we get to here, they're just even more extreme. And then we get to here, and they're just even more extreme. And then finally, right, that top gets put in, and we go, oh, see, the funding was extreme. It was so obvious. Okay, but so was this, and so was that, and so was that, and so was that, and so was that. So you just missed out on an 8-month-long, bull market. So be careful making redundant arguments where it's a very heavily skewed in terms of, or it's very heavily extreme in terms of probabilities and risk reward. You're probably going to be wrong 80 times, but the one time that you're right, you're going to call the top, right? So just be careful with that.
Yeah, a lot of the funding open interest arguments come down to lower time frames, in my opinion. They're high time frame open interest has its use, has its place. It needs to be very discretionary. You need to know what you're looking for. Open interest is a extremely strong tool for the 1-minute charts, day trading, scalping, etc. You need to be very careful with how you use it. And have a good understanding of it, because there's these repeated kind of mantras on CT that, this is that, but people kind of just regurgitate it because they know that it'll get a lot of clicks. Not a lot of people understand order flow. So anyone who puts out kind of order flow analysis will get a lot of hits. A lot of CT accounts understand that, and they kind of use it to their advantage to farm a lot of engagement. So unless you yourself as a trader has a good understanding of these concepts, I would stick to what you actually know and are comfortable with to manage your trades.
Yeah.
Jagger's asking, I don't personally have a long-term hype bag. Do you, Mercury?
Long-term hype? No, I do not.
And
the only long-term bags that I have are Bitcoin and Ethereum, and that's it. Yeah. And that's just because that's all that my puny little brain can comprehend from a fundamental standpoint. I understand that hype has great fundamentals. I actually was making the argument that, like, as a trader, you need to be able to separate investing versus trading. And if we're not able to do that, then we're constantly going to have this like ability to look back at ourselves and say, whenever the market's going down, we are shitty traders because we're bag holding too much of our investments. And whenever the market is going up, we're shitty investors because we have too much sideline sitting in cash and not being appreciated via that asset. So if you don't have a very distinct, definitive way of like, this is my investment account, this is my trading portfolio, then it's going to be very wishy-washy, because throughout this downtrend, I had to sit here and listen to traders say, oh, I'm down, I'm a trader. All I do is trade. I'm only here to be a trader. I don't invest in the market, but I'm down negative 50% on hype. Why? Oh, because it has good fundamentals. What? It doesn't matter that it has good fundamentals. The trade is going down. The chart is moving downwards. Even a 4-year-old understands this is a downtrend. Why are we still in that position because of good fundamentals if you are a trader? And that was the thing that I upset a lot of people. I don't know why. Hyperliquid maximalists attacked me. And then, their exchange had a bunch of bugs and whatever. And I was like, hey, I hope you guys make it out and see it through. I want to see you win. And then they won, right? Because the fundamentals are fucking great, but only after price went another negative 50% lower from there, right? So it's like your fundamental analysis ain't shit because the momentum as a trader or the price action is what you care about. If you're an investor, you're not playing price action. You don't care if hype is trading at 30 or 9. It doesn't make a difference to you. You're playing the time variable. You're playing, I am in this thesis because if a long enough time goes by between where I start applying this thesis and the more amount of time that goes by since when I started applying it, the more likely I am to be correct.
Yeah.
But that has nothing to do with price action. So I invest in things that I understand, and truthfully, I only understand Bitcoin and Ethereum. I don't really care about hype, but man, it has been amazing to trade. It has just been such a clean chart. So I'll take positions when I can take them, but I know the difference between investing and trading in my regard.
Yeah. So the only long-term bag that I have is Bitcoin, locked up, cold storage, not touching, only adding to, right, when I find it to be reasonable pricing and stuff like that. Everything else, I consider myself a positional trader. I even held, there was a portion of Pepe. Pepe's been kind of like my, home run trade for this cycle. Even in the Pepe trade that I was in and out of for 2 years now, there was still a portion, 70 to 80%, that I was trading around. There was 20 to 30% that I held that entered long-term capital gains, but a lot of that position, I was still positionally trading around. When daily trends are lost or 4-hour trends are lost, I'm taking significant profits. I'm not leaving a 10x on the table to retrace 80%. I'm using that as an opportunity to lock in gains. And hey, if it revisits weekly trends or something like that, that's an opportunity for me to compound. Even if you're taking, short-term capital gains and you have to pay that kind of stuff, it's still worth it, not thinking about, oh, how do I, maximize my tax fucking payments when you know that an asset like Pepe is going to retrace 80%. You're not giving that money back to the market. So I consider myself a positional trader. If I'm taking positions on any coin from a spot perspective, which I do very often, I'm still considering them trades. The reason I buy spot over perps is because it's cheaper. Right? I don't have to pay funding. I don't have to worry about any of that kind of stuff. Yes, on entry, spot fees are going to be slightly higher than perps, but I like the idea of self-custodying. I don't want to keep, fuck ton of money on an exchange, right? I want to hold that in my personal wallet. So I prefer spot if my idea is I'm going to hold this position for multiple weeks, if not months.
Yeah, I just want to shout what you just said. I think actually somebody asked earlier in the stream, and it got kind of buried in the chat. But do you guys take spot positions or something along those lines? Pretty much 99% of the time. Well, maybe not 99. Let's say 90% of the time that I'm trading this market, I'm taking spot positions. And that's purely because the trade that I'm in, I typically would consider myself, like if you were to basket me into a group, a high time frame swing trader, right? So typically that's where I'm making the most of my money, is by just taking spot positions and allowing things to run for long periods of time, and capturing those trending movements. That's the goal. That's the objective. So if I'm going to do that, it doesn't make sense for me to sit in a hyper liquid position for 3 months and pay funding for the next 3 months, right? Because I'm trading perpetuals. It makes a lot more sense to just buy spot and ride it through, even though it's not an investment. I'm not investing into hyper liquid. My thesis has nothing to do with the fact that, the team does buybacks every day. They were doing that when we were going down negative 70% too. That's not applicable, right? That becomes an afterthought because, oh, market structure has broken. Trend has been shifted. Key level has been reclaimed. And now I apply my trading thesis, but I want to trade it via spot, right? And again, I'm always thinking directionally proportional. So in this case, Hyperliquid is reclaiming a trend for the first time, bar this fluke, right? For the first time in 4 months after a negative 60% sell-off. Maybe we do something different. So I'm not looking for a measly 10% move, right? Because again, the follow-up question becomes, okay, if you're taking spot positions whenever you're taking higher time frame trades, how do you know when the trade is going to be higher time frame versus, oh, I plan on being out of this trade in a week, right? Two totally different things. Because I'm not trading this is a local trend reclaim into a bearish, trend retest. I'm not trading that because if I was, I would just take a perpetual setup. I'm just looking for a quick, 15, 20% movement. That's it. Get me out of the position. It was good profit, right? But I'm looking for, we just did something different for the first time in 4 months after negative 60 or negative 70% lower of downtrend. I'm not targeting, small movements. I'm targeting big boy movements. So I'm going to take a spot position in that case.
Well said. Another caveat here, I just want to mention quickly, when people say, spot versus perps, people generally get this impression, oh, you're trading spot, you're not betting big enough, you're not risking enough, whatever. They don't understand that perps and spot are kind of the same thing. Perps are a positioning tool or a sizing tool. They're not this, make more money, risk more, bet more, be a degenerate tool, right? People don't understand that. I just kind of wanted to throw that in real quick.
It's a great ad.
Let's see what else we got here. There's some stuff at a pump bottomed. We'll look at that in a little bit. We'll do some chart requests in a little bit. Let me get to some other questions. Do you have any thoughts on stablecoin tokens, Genius Act? Because I certainly do not. I stay away from fundamentals. I treat them like cooties. I don't really care.
No, I think it's so awesome that people consider me intelligent enough to answer questions on this stuff. Let me go ahead and tell you, I am not. I know absolutely nothing about any of that. I can tell you when the chart is headed up and when it's headed down, and that's about it.
Yeah. That's kind of how I look at it. I stay within my lane. Things that are, repeatable for me to make money off of, I stick with that. Speculating on news and stuff like this just isn't for me. I think anytime you get a bullish narrative surrounding a coin, yes, it's going to help that coin maybe do better than other coins in the market. But to analyze how bullish it is for that coin, what price it should reprice to, how long it should outperform, that stuff's very difficult for me. I'd rather just stick to the chart. Doc, you said you trade 1 minute charts. How do you call yourself a positional trader? What's a strategy position? I do both, right? So it's like when there's big meats of the move, when I think that Bitcoin's going to break out, I obviously want to take spot positions. I always want to pick those up. So let the cash do the cash thing, right? I don't have to worry about it. But from a day-to-day trading basis, clocking in at 7 o'clock in the morning, starting to watch charts, being prepared for New York Open session, and trading the first 6 hours New York session, and then clocking out, and then just being done and going to sleep with no perp positions open, no overnight positions, and have the long-term, month-long, 3-week-long, 2-month-long, 6-month-long positions do what they need to do and not care too much about intraday movements on those. Oh, it's pulled back 5%, it's up 20%, right? I'm just gonna focus on the super high time frame levels, weekly levels, daily levels, and stuff like that on those coins. So you can do both. That's the way that I trade it.
Be very careful doing both. For anyone that's listening to that and is using Doc as an influence of okay, I'll give that a shot. Where that you might find comfort in that, because again, like I said, every trader's different. Where you might find comfort in that, you might actually lose yourself as well, right? It's very easy to start trading or managing your positions on your swing account based off of what happened on your scalp account, or vice versa, right? It's very, very easy to start to get things intertwined and start to confuse yourself and make things harder on yourself. So just be very careful for anyone who's actually going to go out on that venture. It works for Doc, it doesn't work for me.
So the advice that I give people, if they're trading multiple time frames or different ideas, is to have the money separated, right? Have different accounts. Yeah. So one thing that I used to do, so this is a circa 2023 Q4. I learned this the hard way back then. I had a bullish thesis or a bullish trade on SUI, I believe at the time. It was there were two. One was Arbitrum and one was SUI. There was probably a couple more. And I learned the hard way that I had a swing position open in the same account that I'm trading intra-week on. And if a big flush happened and some of my 4-hour trades got stopped and the SUI trade was still in profits, I felt the need to kind of compensate for one L by taking profits on another one, right? So I kind of abandoned the thesis on high time frame SUI that they should do a 2x by just being oh, it's still up 30%. Let me lock this in so that my P&L curve for that account is still bullish in the last 4 days, right? And what I learned the hard way, or learned from that experience, is to separate the accounts based on time frames. So what I started doing is putting money in a sub account. I would open a sub account, I'd throw the trade in there, Now I have an extra barrier. Like I actually have to flip accounts, or I put it in a different exchange. Or what I do nowadays is buy spot, put it in the ledger, don't look at it, can't touch it. There's like 4 barriers there. Now I gotta put in the code, transfer to this, and do that, and then click the button. It's going to take 30 minutes to do, so it doesn't get kind of conflated with what's happening day to day. So if you guys have, trading multiple time frames, just try to use sub accounts, separate the money. It makes things easier.
Yeah. So this question says, Merc, so you don't care about the narratives of your coin you're holding, and also you don't pay attention to seasonality / macro / whatever it is. You just focus on your discretionary on-chart momentum. Absolutely. For the seasonality thing, dude, it's so hilarious to me. People will, oh, we pumped on a Sunday, and then use that as a reason as to like why, price should not go higher. But meanwhile, all I've done is say, okay, this is an uptrend, so maybe we'll continue uptrending. And then we do, right? Or, oh my God, Bitcoin is showing strength and it's reclaiming high time frame trends for the first time in 4 months, and it's doing this and it's doing that and blah, 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 and blah, blah, blah. Oh, but it's happening in June, so no, I should probably neglect it and not care and fuck off and come back after Labor Day. Like, what? What are we talking about right now? Just random arbitrary thoughts that get applied that like totally just shadow over any objectivity that's happening in the market because of a narrative, right? Because of a thought and something that you think is happening behind the scenes. So like for the hype example, if we want to go back to that, hey, if you're a trader, you shouldn't be bag holding, as coins drop negative 50% lower, because that means that you're a shit trader. Why are you bag holding things negative 50% lower? The whole point of being a trader is so that after the fear has set in and there's nothing left in the streets but blood, you can buy. How are you buying the blood in the streets if you are the one that's bloody, right? It doesn't make any sense. So you can't be a trader bag holding negative 50% lower. But Mercury, Hyperliquid, the team, does buybacks every single day. Okay, cool. And yet somehow the chart is still negative 50% low. So like, what was the point? Why did you even care to add that into your thesis? What was the idea behind that? Another great example of this, and something that I often refer back to, is Pentoshi at some point in the last bear market, or the bull market, somewhere in this region, Pentoshi puts out a thread where he's like, hey guys, I've been LARPing as a macroeconomist for the past like 5 months. I've read a lot about it. I've talked to a lot of really smart people because I have a pretty large network. And yeah, everyone's kind of just, saying that this is going to happen when the Fed, starts to cut rates or whatever, or hike rates. But I think that people aren't understanding why the market is going to go lower when the Fed starts to hike rates and starts to give this very long, lengthy, like, essay about why the market is cooked and why we're heading into a bear market. And meanwhile, all I did was say, hey, we were uptrending for like 2 years, and now we're not. We broke down below this range. Market structure is clearly, lower high, lower low, and we're below that trend. That's all 3 parts of my system: support, structure, and moving averages. Everything is telling me, hey, we're probably going to go lower. And then Pentoshi and I are both geniuses all of a sudden, and miss out on a year-long bear market as a result. Meanwhile, the 10 and the 2-year bond yield curves, right? Every time that they invert, they're always 100% of the time a recession indicator. 100% of the time since like 1920s or something. Every single time that the bond yield curves, the 2 and the 10 years, start to invert, they have always led to a recession within the next 6 to 18 months after inversion. The inversion happened here. Where's our recession? Where is it? Your narrative is bullshit. If you're sitting here saying, oh, but the bond yield curves, they're still inverted. Nope. Why would I be bullish? Stocks just made a new all-time high, but the bond yield curves are still inverted. They didn't reinvert, as far as my knowledge is concerned, until here. This is when they went back to their default. Where's the narrative? Another, last one, and then I promise I'll shut the hell up. Another reason as to why narratives are bullshit. Somewhere around here, Ethereum Classic starts to rally somewhere around here. I remember Loma was like a big pusher of this narrative. Hey, retail is here to come buy our bags, and what's going to happen is they're going to log on to Robinhood, and they're going to market buy Ethereum Classic instead of Ethereum because they're going to see Ethereum Classic trading at $10 and they're going to see Ethereum trading at 4,000. And they're going to go, oh, Ethereum Classic is so much cheaper, so I'm going to buy that instead. How can you tell me that Lomas or whoever else, because there was a lot of people, pretty much this was the consensus narrative on the Western side of the world of crypto Twitter, right? This is the narrative. People are coming to buy their bags on Robinhood. Retail is here. What ends up happening is 70% of all volume that was traded on this day was done on Hotbit exchange. I think that's what it's called. It's a Korean exclusive exchange. 60% or so of all the volume that was traded at the very top came from Hotbit. You can only trade on that exchange if you are Korean. The next like highest exchange with the most volume was Binance, and it dwarfed Coinbase volume. Robinhood volume was like 10th on the list. How are you going to tell me that all the move happened because of Robinhood traders coming on? It's obviously not what happened. It's so clear that that's not what happened. It's so easy to refute that narrative. But how are you going to tell me that that narrative was wrong? Because price went 20 times higher, right? But we know that it's bullshit. We can verify it just by using logic. Volume does not equate to buying power, right? Net buying pressure. That's not what that means. But when it's that big of a discrepancy, when 90% of the volume is coming from somewhere that isn't Robinhood, it's very easy to refute that narrative. So think about if a narrative has the ability to be refuted that easily, and yet we have the statistics to refute it, what do you think about all the narratives that can't be refuted as easily? Maybe they're just bullshit. Maybe it's just smoke and mirrors, and the chart is always going to tell you the truth, right? That's my belief.
Well said, man.
Thanks for coming to my TED Talk, guys. Appreciate it.
All right. What's the most efficient way to sell spots on Coinbase off Coinbase? For a lot of people that don't know, Coinbase has two platforms. There's the Coinbase Classic that everyone's familiar with. There's also Coinbase Advanced. If you're on the desktop app, there's this little switch where you can just turn on Coinbase Advanced, and that drastically lowers your fees. Like insanely lowers your fees. So if you're trading on Coinbase, definitely flip over to the advanced option. It's going to be a game changer for you for buying and selling spot. And number two, big announcement, perps are now live on Coinbase in America. So if you guys haven't checked that out, I think worth your time to check out, especially if you're like me and an American and it's difficult to trade perps, right? You have hyperliquid, you got to bridge and do all these other things, or maybe you have a dual citizenship or something like that. But as an American, I think it's pretty cool that they have perps available. So definitely check that out. The coolest thing for me, by the way, this is just from my perspective, is market buys on Coinbase perps are going to be cheaper than all other platforms. I think it's like 2 basis points for market orders. So definitely check that out if you guys have time. It's live today. Okay, we got a hype question. I think we talked enough about hype, John. if you missed it, scroll back a little bit. But Mercury and I both, gave a lot of thoughts on hype. Your views on those charts, ENA, Frax, Sky. Maybe we'll do, quickly scroll through some charts, chart requests at the end. Thoughts on syrup. Mercury, you want to explain how you take profits or stuff? Got a question from Leo.
Yeah. So the way that I take profits is, again, similar to like that directionally proportional idea where, if a big breakout happens, then I'm going to target big boy movements. It's the same thing when it comes to resistances where it makes sense for me to take profit. So like if I'm looking at, we're just going to use Ethereum Classic as an example since I'm on the chart already. If I'm looking at Ethereum Classic, I'm going to find some kind of high time frame trend that is being respected. And I'm going to say, okay, here's why this is relevant. The thesis starts to get developed. I start to develop my targets, right? What happens is I start to acknowledge, okay, well, here's some, hourly resistance. Let's say my entry is right here. Here's hourly or 4-hour resistance, and here's the range high, and here's a massive resistance level that has made some pretty big like pivots on a more historical kind of basis. The amount of profit that I'm taking here might be very minuscule or negligible, or maybe I'm not even taking any profit at all, because it's just not really all that rewarding to start taking profit on my thesis 12% higher if I'm targeting big boy movements, right? If the context is I am allowing myself to think logarithmically instead of thinking linearly. I have a reason to believe that, Ethereum Classic is going to break out of this range. Contextually, we made a higher low on the weekly, right? That's a pretty good substance in terms of arguments as to why the context changes this time around, right? Something as simple as like, well, this time we made a higher low on the weekly chart. Okay, so maybe the probability of breaking out of the range this time around is greater. So I'm not targeting just a move, mid-range range highs, 12%, 20% higher. I'm targeting a bigger kind of movement, right? So this is how this theory might develop. Once that thesis develops and once we're finding ourselves in that trade, then it's a matter of how important is the resistance levels are the other characters, right? The main character is we are shifting into an uptrend, higher low in the weekly, back inside of the range, back above key trends, higher highs and higher lows on the 4-hour chart, whatever, right? On the daily. That's the thesis. That's the main character. All the side characters are, oh, we have resistance at 19 bucks, right? On the hourly time frame or mid-range. Oh, we have range high resistance at 20 and a half, right? And then what are the things that are more important main characters? Oh, we have massive range highs all the way at $40, right? Or we have this massive pivot point on a weekly basis at 24 bucks, right? So think logically yet again, because the directionally proportional idea is not like rocket science. It's not beyond your comprehension. It's when we have a big boy, significant kind of movement or occurrence in this market, we want to think in the same degree, right? Using the same kind of cadence. So think about it that way too. If I'm targeting a major movement, if I have reason to believe as to why this move might be substantial and the infrequent times where this market actually gives me what I'm here for, then why would I cut half of the position 12% higher? Doesn't make any sense. Oh, but you want to take half of the initial off so that you can be break even on the trade. Bullshit. You suck as a trader. That's paid guru bullshit. You're trying to mile people into. It is. Let's be honest, man. It's arbitrary bullshit that you're talking about right now. That is not profitable trading strategies. You're telling me that if Ethereum Classic did this, right, and you move your stop back to break even, you took half of the position off 12% higher. Oh, but I didn't lose on the trade, guys. Yeah, but you're not winning, though. You're making sure that when the times for you to win hard come around, you're losing. You're taking too much profit too early. You're being too aggressive with stop losses, right? You want to be more logical about it. Hey, this is a pretty insignificant resistance, but at the same time, it's still resistance. I need to respect it. I'm going to take 5 to 10% of profit off. Oh, hey, we're at a range high that has been a range high for the past 4 months. I'm going to take off 20% of the trade. Oh, we're at a major fucking pivot point resistance level that has been major resistance for the past 5 years. Oh, okay, maybe I'm going to take half off of the position, right? And then so on and so forth. That makes more sense just because you're thinking proportional to the amount of respect that you should be giving those levels, right? Based off of what they've essentially previously done and what kind of respect they're deserving of.
Well said. How can I ask you a question that's just personal? How often do you get asked per day or per week what your EMAs are?
Oh, man. Probably about 10 times a week.
Okay. All right. It's about the same for me. I get asked so much on stream that I actually went through the trouble of finding a bot so I could do this in chat. now anytime someone asks, I could just click !trend and hopefully the bot works well enough that it just posts it in chat.
Oh, nice. Yeah, it did.
Well, there
That's
you
pretty
go.
cool.
Yeah.
Wow.
The Korean soul.
AI.
Thanks, Mario. Okay, check out a bunch of chart requests. All right. We can move on to the chart request portion, I guess. What up, Jingo? Yo, pull up MOBY and get Mercury bullish. So Jingo actually gave me a trade on MOBY like I think last week or something like that, and he was just like, yo, Doc, ape this. And just blindly, I was like, I'll trust him. This guy spends all day on chain. So I just aped it, and it's up like 75% in a week.
Nice.
Look at that. Look at that unbelievable chart that you just found. That's
What the fuck is this?
No. It's an on-chain coin, so obviously TradingView's not going to have a very good chart.
Yeah.
But it is up 75% on the week, so thank you, Jingo.
Man, that's funny.
There you go. That's probably the
Well,
one.
to be fair, I clicked Poloniex, so there's probably like 3 people trading there.
Yeah.
Yeah, I think it's hilarious, man. I always get like chart requests on stuff that looks like this.
Mm-hmm.
This actually isn't that bad. Comparatively, this has 5 months of history to work with, and the levels are pretty clearly defined, I would think. Right? Like they're pretty much, that's pretty much what you're working with. I'm sure if we zoomed in, like levels overhead are also pretty clear as well. So this is like a 4-hour resistance. If we're targeting a breakout of a 4-month-long range, I'm not going to capitulate at a 4-hour resistance level, right? That just wouldn't make much sense. So just thinking about the market, logically in that manner, this isn't that bad, but I always think it's hilarious when I get like chart requests and stuff that looks like this. I'm like, guys, I don't know what to tell you. This ain't my bread and butter. And kind of like what you just said, the only way I would ever find myself in this is if someone else was like, Mercury, please just buy this. It's a gamble position. It might go to 0, but it might do 100x. And I'm like, okay.
Brother,
always think about that.
Speaking on fundamentals that we talk, I have zero idea what this coin is other than the name MOBY. I'm just learning now that it's AI by that TradingView chart because I haven't even looked at it on TradingView yet.
Yeah, so I always think about it as like it's a secondary thing, right? Like in one hand, and this goes back to everything in trading contradicts itself. On one hand, you want to play into your strengths. It does not make sense to be playing into something that you're not nearly as comfortable with and where your strengths don't shine, right? You're weaker in that particular area. So you want to be primarily focusing on your strengths. But at the same time, crypto is so damn lucrative that, like, dude, I'm not a farmer. I'm not an airdrop farmer. In the past 2 years, I've made over 6 figures from fucking airdrops. It's insane. It's too damn lucrative for you to not be venturing off into those different periods in the market, right? Like, you need to be in the trenches to some degree. That's not to say that you need to be Jingo and, staring at the 1-minute chart and waiting for new coins to get created and trying to use your discretion on what's the next gem or whatever, right? Like, you don't have to be doing that, but if you're not at least open to that, then you are, like, setting yourself within this limit, and you're putting a limit on yourself, and that's just not something you want to do in crypto in this lucrative of an industry.
Yep. All right. Let's do some chart requests. Let's see what's here first. SPX. All right, let me grab that real quick. You want to do the next one, Merc? We can rapid fire like 5 or 10.
Yeah, sure.
All right, SPX. All right, guys, what do you think I'm gonna say before I even say it? Y'all know how I trade. Offer, you've been in plenty of my streams. You know exactly what I'm gonna say. If the 4-hour trend is lost, look for a correction to the daily trend. Clean SR, clean trends. You've already got one establishment of this meta. 4-hour trend loss, tag of the daily trend. Look at the reclaim, bullish, looks phenomenal. All I'm going to do is draw this. We'll come back to it next week and see how it plays out. Either it's going to continue holding the 4-hour trend or it's going to lose it and you're going to get a tag of like 162.
What's next?
Throw it back to you. You want to do Link? Someone said that I hate Link, so let's do Link.
Man, if I'm the person that has to say something good about Link, we
Say
have
it.
an issue.
Be nice.
No, actually, Link looks pretty good, I have to say. Very clean, above high time frame trends. I do like 4-hour 200 moving averages here as a high time frame trend representation. Let's see what the context is looking like on a greater time frame outlook. So all in all, I would say 200 daily moving averages do deserve a pretty good amount of respect on a massively higher time frame. So the fact that we're above them is obviously favorable in terms of like context, in terms of environment. So I always think about markets as like a puzzle. And when you're making a puzzle, you typically start with the border, right? You don't just start grabbing random pieces and putting them together. you grab the border because those have flat edges and those clearly connect with each other. And then from there, it's much easier to break things down and make things make sense so that when you're looking at the puzzle as a whole, it's clear, right? So I do the same thing in markets. I want to develop some kind of foundation and then I want to add detail to it. So from an environmental standpoint, from like what is the gist, the overall favor, the bias for Link, bullish, right? We're above 200 dailies. We just broke out of a 5-month trend. I'm sorry, range. And now we're trending again for the first time in 5 months. And that just happened, what, 4 days ago, right? That's when that new environment kicked in. 4 days ago, we broke out of a 5-month range. Crazy, right? Now we're back above substantial high time frame trends. So then we develop more context, more detail. 4-hour 200s are a great representation on a high time frame basis. The issue here is that they're irrelevant, right? Price is moving so parabolically, the velocity is just so extreme that we've rendered, hey, you either bought the 4-hour 200 MA's breakout or you're sidelined, right? And the difference between, just 10 days ago and today is 44%. So in order to continue seeing a clear puzzle, we have to zoom in even further. So I got to zoom in. Okay, is the hourly time frame getting respected? Nope, that's pretty irrelevant too. It's not telling me anything that I didn't already understand before I went to this time frame. So I got to keep trying. All right, so then I go to 30-minute. I go to 30-minute. Okay, this is a little bit better. I just wonder if I can find something that's, more cohesive, that's more well-respected. 15-minute 200 moving averages, more or less, right? They give flukes, they give fake outs, it is what it is, but in terms of efficiency, this is really the only way to portray what's happening for Link the past week, right? Everything else has been rendered irrelevant. So now I can develop an analysis where it's like, if we lose 15-minute 200s, I can look for that pullback into 4-hour 200s plus, previous range highs looking to be flipped into support. And it just so happens to be that 200 dailies are perfectly lined up in that region as well. So that is an inflection point for that market. I can make the same exact argument up, and a more up from 7 different perspectives, right? On multiple different time frames. As long as we continue above these 15-minute 200s, your argument as to why this is going to break down is pretty weak, because you could have made that argument at any point the past week and it wouldn't have mattered because price is currently 30% higher, right? So we're at resistance. Resistance is resistance. You should respect it as such, but the trend is still the trend, and one of them has to win. So that's the way that I look at that.
You're much more patient with me when it comes to analysis, man. I would have taken 15 seconds to say what you just said. Shout out to Mercury for joining the stream today and having the patience to explain all that to you guys.
I like to break down the thought process. Yeah. The moving averages mean nothing if you don't understand how they're being used. And like the question that I get a lot is, Mercury, your entire system is out there in like a YouTube playlist. Are you afraid of alpha decay? What if everyone just copies you and all of a sudden your entries are getting front ran and blah, 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 blah. And I always tell them, you can't have alpha decay if you don't have alpha. There's no alpha. You can't turn 200 MA, 200 EMA on your chart and all of a sudden you're George Soros. Like, that's not how it works. You have to understand the discretion. So the only alpha decay is if I get dementia, right? Like, honestly, that's a joke. It's not that funny, but that's all I could think of.
All good, all good. All right, so I'm kind of shocked that so many people are asking about POPCAT. Like, I didn't think anyone cared about POPCAT anymore, but I'll quickly look over it. I've opened it up here. All right, so one thing I want to say about POPCAT is, in the most bullish environment that this market had last summer, being the outperformer of last summer, being in an uptrend, falling flat on its face in November was a little bit shocking. Dropping 94%, not having the most bullish price action ever since, kind of still not setting a higher high since May. It's hard for me to want to care about this coin, right? I just put it in a basket of coins that, like, hey, there's a billion coins in this market. Why should I care about this one? Now, that being said, I'm sure a lot of you guys are still holding this and you're looking to get out somewhere closer to your entry or make a profit or something like that. So all I'll say is pay attention to the daily trend. This thing has been giga clean for I don't know how many months, 6 months, 8 months, almost a year. It's giving you probably the cleanest signal. So if you get trades that drop into the daily after flipping bullish here, reclaiming this level, and you get a pullback into this region, look to defend that. If POPCAT stops showing respect for the daily trend, you guys know what to do. It's as simple as that for me. ABC.
Very nice. All right, what's next? What we got?
Syrup. Syrup's one that was hot recently, like super hot. I think it recently broke trends. A lot of people are asking me like where to buy the dip on this one, and I kind of was saying either reclaim or much lower. So your system differs a little bit from mine. I don't know what your equivalent weekly trend would be. That would probably be the daily 100, daily 200, or maybe you use 200. So the daily 200 a little bit lower, probably confluent with the next support level. But yeah, losing that trend, I got asked a lot, like, what do I do from here? And I was like, the minute it gives you that fake out, you see that kind of reclaim attempt fake out that you have on your screen. It's like the minute it gives you that fake out, it's like, for me, it's like, fuck this. Like, I don't want to touch it until it comes much lower.
Yeah, so this is what I talk about. Where like this is trend continuation, beautiful uptrend, right? And this is probably a more local trend, and then that breaks down, and then what ends up happening is we don't know that 3-hour 200s are going to be a beautiful trend because they just got created, but what ends up is they get established as a beautiful trend. So then in hindsight, we can use them. This is a fluke, it's a fake out, it's a deviation. We know that because here's the reclaim. So we run back the same thesis that we had back here, right? And it works. So that's plan A, plan B, plan A part 2. This is just simply, okay, why would this not work, right? The same way that it worked this time. And then it doesn't. Plan B, plan A part 2, this is what we call variance. We got the same shit that we got here, but we got a different outcome. So instead, we got, hey, we're forming more resistance here. We're chopping up the trend. It was previously alpha, but it's not alpha anymore. And then from there, okay, this might be more of a range. And then we start to chop up, and then now we're breaking down below that range. So now this is momentum, very strongly favoring downside. So I very much agree with you. And the issue here is, and why I hate charting these newer charts is like, I don't have a way to scale this, right? I don't have that puzzle piece analogy that I've, typically use as a form of comfort in a sense that like, I can be bearish on this scale, but on this time frame, that's an uptrend, so I can be bullish on this time frame, right? I don't have that here because there's such minimal price history that there's not really an inflection point. There's not a region, and maybe, if you extrapolate this onto a DEX chart or whatever, instead of Binance listing, maybe that differs, sure. But as far as I'm concerned and what I'm looking at right now, there's not really context. There's not an inflection point. I can't say this is the most ideal place to find a bottom. All I can really say is that this is a support level. The same way that this was a support level, the same way that this was a support level, right? So like, what's stopping this support from breaking just like every other support on the way into it? I don't know, right? Because there's not that extra context. So typically you're going to find me not trading these newer coins for that reason.
Gotcha. So this is a question, or this is a coin that I get asked about almost every week. At least one person asked me about syrup on the stream. So we've been kind of watching this for 3, 4, 5 weeks in a row. So it's been kind of ongoing analysis. So to update from there, when we got this breakdown right here, my analysis was simple. It's like trade down to the weekly or reclaim the daily, right? When the daily was reclaimed, we basically have a market structure break. You're taking out the high that led to the low. This now needs to hold, right? If this is a failed breakdown, this now needs to hold. When the market disrespects the reclaim and starts trading below it, I do not care about it. I would rather wait for it to tag the weekly. This is that classic daily to weekly gap fill that I always talk about. If this is going to go back to being bullish, we need to hold the weekly trend. We need to establish this as support. This could be a high time frame sweep at this level, and you need to have momentum loss. So this is very strong bearish momentum with lower highs and lower lows. This needs to round off at this location. The daily trend that is now bearish needs to be reclaimed back to being bullish using that high time frame weekly trend as support. And then you could look for higher prices. Most likely, because this rallied so hard, right, from this long accumulation range into this large uptrend to now reaccumulating here, I would look at it as a similar situation to something like we talked about earlier in the stream, which is FARTCOIN, right? Extremely strong high time frame uptrend. The daily trend breaks, you find support at the weekly, you spend a long time here chopping around, eventually you reclaim the daily and a fresh uptrend forms. So I would say for syrup, probably something similar occurs here, where a lot of people are gonna, expect V-shaped reversal and new highs, and they may get chopped up a little bit and get stuck at range highs, come back to the lows, something like that. So we'll see how this forms, but for bulls, you want this region to hold for now.
What's next?
Have we talked about? I think we talked about Solana already in the stream, didn't we? Or maybe no, it was just Sol ETH.
Oh, we didn't look at we didn't look at USD.
Yeah, I'll let you do Solana.
All right. So Sol is actually breaking out. This is starting to look really good, I have to say, as far as the USD chart goes. So this is my very high time frame trend, right? This is the border to that puzzle piece. Everything else is context, right? And more actionable information, because obviously I'm not waiting for weekly candle closes to say, oh, I think Solana's bullish now, right? Because it's like, thanks, Sherlock. We already knew that. So that's the context. Sol is breaking out of this 8-month range, right? It was an 8-month range. We ranged in it again for another 2 or 3 months. It's a massive range. Let's just say that, right? It's absolutely fucking massive. We're breaking out of it. We're also reclaiming 200 dailies, right? For the first time in 5 months or 6 months, whatever. And when we lost those 200 dailies, the argument was, oh shit, you are not buying dips. This is not a dip anymore. You're buying downtrends, right? You have to know the difference. So negative 50% lower as a result. We just reclaimed those 200 dailies 4 days ago. We just broke out of this 8-month or, year-long range, let's say, today or even yesterday, right? This is new. This is fresh. This is added context on a much greater scale that we can hopefully play into and get rewarded for on a much longer term outlook. So what starts this rally, because I'm notorious for this idea that you can't create a snowman without building a snowball first. So if we want to get to price discovery, right, $1,000 Solana, maybe just a sweep of this high, whatever, right, whatever you're looking for, we can't do that without breaking out of this 8-month range. We can't break out of this 8-month range without reclaiming those 200 dailies. We can't get to the point where we're even bearish retesting those 200 dailies until we're reclaiming the high time frame trend, 4-hour 200 moving averages, right? And that has, again, been a very clean and clear-cut trend. When we're above it, good things happen. When we're below it, bad things happen, right? Same thing here, negative 25%. We find support at that range low. This is what kind of vindicates you. Hey, we did find support, range low, might get to mid-range. Here we are, might go to range highs as well. And added strength, added momentum. Here's consolidation around this high time frame trend. Here's a breakout of that consolidation as well. So good things are happening. The Solana chart is getting gradually stronger, and essentially now it's fully peaked out. You can't really get much stronger on Solana than current prices. And that's just to say, like, you don't want to be increasing your perception of how strong is Solana throughout this 90% rally, because the strength was shown to you here, right? And again here, and in the form of a higher high here. So contextually, it's just going to be the same market through and through until we lose this region, until we lose the same things that got us here in the first place. 4-hour 200s start to break back down. This ends up being a sweep of the highs or a deviation. You go and look at 200 dailies and they look like this, right? We're trading clearly below them. So unless this happens, good things coming for Solana, I would imagine, right? Higher prices, let's target 260, maybe even price discovery again, so on and so forth.
Yeah, I have a pretty damn similar take to you on Solana. I think this breakout is pretty nice, man. This breakout that we got right here.
Very clean local trend too.
Yeah, absolutely. The consolidation below it into the giga strong expansion is what I love to see. Whenever there's very significant resistance levels, I don't want to see this like baby dick breakout. I don't want to see something like this where we barely drive above it. I want to see a Chad move like this. This to me is a proper breakout, right? When people tag me and stuff that goes, oh Doc, it's breaking out because we're trading $1 above a level, like, no, that's not a breakout, bro. Like, you want significant clearance of a level. So from here, I think the bias is super simple, right? It's shown a lot of respect for the 4-hour trend. It is expanded above 180. Dips are for buying. You don't really want a perfect retest. I think a lot of people are going to be eyeing a perfect retest of 180. If Solana is super strong, you're probably not going to get it unless Bitcoin randomly decides to flush really hard at one of these points, in which case you buy that liquidation. For now, I think Solana is probably not going to give you a perfect 180 retest, and you're going to have to, if you want to bid this, probably bid this higher off the 4-hour trend if you get that retest. Mercury, let's wrap it up there. We've been going for 2 hours. I think we covered like a lot of stuff today. I think this is a stream that you guys are going to want to come back and re-listen to because Mercury dropped a lot of like really good alpha. I haven't talked to him in a really long time. So if you guys missed the stream, come back tomorrow, and timestamps will be up on the stream. So if there's something specifically that you want to hear about, it'll all be timestamped for you, and you can jump around and stuff like that. But you have any closing thoughts or anything you want to share, Mercury?
Not at the moment. Somebody asked, is my Discord open? And unfortunately, at the moment, it is closed off. And that's just because I've been getting spammed by bots and whatever. I do host a free Discord. There's about 8,000 people in there at the moment. But those people are pretty exclusive at the moment because I locked it off, right? Just because the bots, the spam, people getting phished, I just couldn't take it anymore. Yeah. And I'm a one-man army. I'm doing all this by myself, so it's pretty tough for me. So nothing more in that regard, but I do have a YouTube playlist with a bunch of education. I talk about a lot of psychology. You can see how my mental frameworks and my concepts and whatever got applied in even 2022 or even 2023 or more recently in 2024. And you have the benefit of hindsight, knowing what goes on to happen. And, obviously I didn't when I was making those videos. So it seems to be something that a lot of people have gotten value from, is that playlist. But for now, that's all I have. I will probably open up that Discord again some point in the future when I can actually handle it. But I got a lot going on right now. I can't handle it. So just stay tuned for it, guys. And yeah.
Yeah, I can't imagine that people don't know who you are, but that's shocking to me. But yeah, at Trader Mercury on Twitter, on YouTube, go follow him, check him out, subscribe to the YouTube, do all that good stuff. I can't imagine that a single one of you guys don't know who this legend is. You guys all probably knew who he is, but you have to give the shout out for the one person that doesn't.
Much love. I appreciate that, Doc.
Yeah, 100%, guys. And then real quick shout out. I didn't get time. I didn't want to interrupt the conversation and shout out the sponsors, but appreciate Telemetry and BonkBot for hooking it up and Coinbase Advanced. If you guys want to check out Coinbase Perps, they go live today, which I think is super dope. Just speaking as a trader first and foremost, that's something that I've been looking forward to, the ability to trade perps as an American in America. So they went live today. I checked out their liquidity and fee structure. It's all very generous towards traders. So definitely go check it out. I'm sure you guys already have an account. And for telemetry, if you guys are trading on chain, I know that you guys like Axiom. I think that's the leading on chain terminal right now. But trust me when I say the team at Telemetry is working. They're working fucking hard, and I think they have a lot of bangers for you guys that you're not expecting. So definitely check them out. Appreciate you, Mercury. Thank you for hanging out today and dropping so many nuggets of wisdom. I love having you on the stream, and we got to do it again soon, man.
Yeah, absolutely, man. Thank you for having me, and thanks to you guys for listening to my TED Talks. I know I like to rant.
Dude, we appreciate it. All the alphas in the rants.
All right.
All right, boys. Appreciate you guys. See you